Hello and good morning. Just wanted to welcome all the Keystone customers and also the Building Point customers this morning to our quick webinar on depreciation rules for smaller to medium businesses. Specifically, it's going to be an overview of the Section 179 and also the bonus depreciation. This will be hosted by Joel Ronco, CPA, RLB Accountants. He works on behalf of Building Point as well as for us here at Keystone. My name is Chuck Kaczynski. I am the VP of Finance here at Keystone as well at Building Point. And we will also open this up to a Q&A period afterwards as well. So feel free. This should take about 20 minutes, 25 minutes max. And then we will open up a quick Q&A afterwards. So without further ado, I just wanted to turn it over to Joel.
Thank you, Chuck. Good morning, everyone. I just wanted to give you a little background about myself. I've been in public accounting for about 30 years. I deal with small to large business customers, and I then do the personal tax work for the owners of those companies. This time of year, close to the end of the year, I'm out meeting with clients to discuss tax planning strategies in order to reduce their tax effects for 2018. Let me just get started. In September of 2017, Congress passed the Tax Cuts and Jobs Act. The President then signed it, and at that time, the new tax laws came into effect for certain items in 2017, but for the most part, they became effective as of 1/1/2018. And the parts of the Tax Cuts and Jobs Act that I wanted to discuss with you all was the effects of the changes in the way taxpayers can depreciate the costs of fixed assets that they acquired during the year. The TCJA expanded on previous rules for depreciation and introduced and expanded some of the newer depreciation methods. The first one I'd like to talk about is what we all call, and what you would call, Section 179 depreciation. Section 179 depreciation is no other way of calling it. That's what it is. That will allow a taxpayer to deduct 100% of the cost of a piece of equipment that they purchased during the year. And it doesn't make a difference when you purchased that piece of equipment. Go out on December 31st and buy a $1,000 piece of equipment, and you will get the depreciation deduction in 2018 for that $1,000 piece of equipment, provided you have it on hand and you have the ability to use it on December 31st. That's one of the requirements of the law. That piece of equipment can be new, but it can also be a used piece of equipment. You can buy it outright, you can use bank debt to pay for it, or you can go out and lease that piece of equipment. Again, it still qualifies. When you buy that piece of equipment, when you do your taxes, you have to specifically identify it as again, I'm slipping in the tax code here, as a piece of Section 179 piece of equipment. And that's how it gets identified on your personal tax return. When you take that deduction on your tax return, it will reduce your taxable income, obviously. But a piece of Section 179 equipment that you depreciate cannot create a loss on your tax return. It can only reduce your taxable income to zero. And for instance, if you have $10,000 piece of equipment and you've got a $5,000 net income, you can claim the $10,000 Section 179 cost in 2018, but you only reduce your income to zero. So you take the $5,000, reduce it to zero, and then the additional $5,000 that you claimed on that piece of equipment will carry forward to 2019. The IRS has, as part of the tax code, there are limits for the Section 179 depreciation that you can take. The limit was increased back in 2017 to $1 million. So you technically can go out and purchase $1 million worth of equipment and deduct that on your personal tax, on your business tax return. There are upper limits as to the amount of equipment you can buy, and then the $1 million deduction starts to phase out. Again, that's $2.5 million, and that may or may not apply here, but I just thought I would mention it. The next part of the tax legislation is, again, I'll slip into tax ease here. It's Code Section 168, but they actually named this, they gave it a name and called it bonus depreciation. As you see on the screen, there is the requirements to be eligible for bonus depreciation. I'm not going to go down that list. I know you can see it. For assets placed in service, as the screen says, on September 27, 2017, you're allowed to deduct 100% of the cost of that depreciation on your tax return. Now, bonus depreciation applies automatically. Section 179 depreciation to slip back has to be elected by the taxpayer. You have to fill out a form 4562. Again, I won't go any further than that, but equipment that you purchase and depreciate under bonus depreciation is automatic. If you don't want to take 100% of the depreciation, you have to elect not to take it. That's the one big difference between them. And where I mentioned before that Section 179 depreciation cannot create a loss on your tax return, bonus depreciation can. So again, in that circumstance where we had a $5,000 profit with a $10,000 piece of equipment, we can deduct the 100% under bonus depreciation and create a $5,000 loss, which you then can use on your personal tax return. There's the slides that are coming up are showing, different applications of the bonus depreciation, farm machinery, computers. One of the things that can happen when you, go ahead, take it back. Keep going. We're getting into vehicles and things that aren't applicable here. So I'm just going to move forward on that. One of the that I haven't included in the heading for this discussion is another item that was added to this TCJA. What a taxpayer can deduct is a qualified business income deduction. What that is, very briefly, is that if you, say, have $10,000 of net income at the end of the year, what the qualified business income deduction is, you get a deduction of 20% of that qualified income. So if the qualified income is $10,000, you take that 20%, which is $2,000, and it reduces your taxable income by $2,000 right off the top. Again, that's what the new tax code is providing to non-corporate, non-C corporation taxpayers. C corporations had their tax rate reduced to 21%. That was how Congress and the President helped C corporations, help sole proprietors, partners, partnerships, and S corporations. They put into place this qualified business income deduction, which gives you a 20% deduction off the top of your taxable business income. So there's a question here, a concern, and I hope that you all would discuss it with your individual tax preparer and do some tax planning with that individual, is if I've got that $10,000 worth of taxable income, do I want to use the Section 179 depreciation to make the income go away, or reduce my income, or the bonus depreciation to make that income go away, or do I get a bigger tax bang for my buck by taking the 20% qualified business income deduction? I hate to complicate this even more, and I hope that you would discuss this with your individual tax preparer and find out what's best for you individually. That's a small piece I wanted to throw in there. The other last piece that I wanted to discuss is what happens if we purchase this piece of equipment and we take the bonus depreciation or the Section 179 depreciation on the asset. If we then turn around in a year or two and sell it. So we bought it for $10,000. We depreciate it for $10,000, and then in a couple years, we decide we don't need it anymore, we want a better piece of equipment, and we turn around and we sell it. So right now, the basis of that piece of equipment that we purchased is $0. If we turn around and sell it for $5,000, we have a gain on the sale of that asset. That gain on the sale of the asset, in this case, is treated as ordinary income, and you pay tax on that gain as ordinary income, not capital gains tax rates. That's the one curve. Again, I'm slipping into the tax person that I am, the tax guru, based upon what Andy had said. And I just wanted to provide that additional information to you all. That is the extent of my presentation. If anyone has questions and they want to ask during the webinar, I'm happy to answer any questions you have. Our website for the office is listed on there. Feel free to contact me or call us, and I would be happy to help you out with any of the items that we discussed in the webinar. Thank you.
Joel, actually, I have a question. For somebody who is going to be making purchases here at the end of the year, is it something that they should be sitting down with their accountant now to talk about these purchases, or is it something they should be making these purchases and then after the fact looking at those purchases and making those considerations?
If possible, I would suggest that they speak to the tax advisor now. A lot of what I'm doing now in my office is going out and meeting with clients and saying, okay, how's everything going through 11 months? Do we have a profit? Do we have a loss? Do you need a piece of equipment that we could purchase from Keystone or Building Point? And by all means, if we need to offset some income, buy it now.
Right.
So we can take, as long as I stated before, as long as we have that piece of equipment in our hands and it is available to be used in December, we can take those deductions, whether it be Section 179 or bonus depreciation.
Mm-hmm.
So we really should look at our books and records and see what kind of shape we're in, and that'll help us deciding when to make that purchase.
So due to the market conditions being strong relatively for companies out there right now, as the year's been very good, there's a lot of tax implications that have changed in the last year or so. There's an opportunity to make these purchases, but it has to be made by December 31st, correct?
Correct.
They have to have the equipment, correct?
Yes. They should have it in their possession and be available to use it by December 31st. Now, that's for 2018. If you feel that 2018 is going to be the greatest year and you want to push it off to 2019, these Section 179 and bonus depreciation, Section 179 is not going to change. Per the code, the bonus depreciation changes, but not until 2022. So these deductions are available in 18, 19, 20, 21, 22, and 23, the bonus depreciation changes. I don't expect it to change. I think this is going to provide some incentive to the economy, to build the economy. That was the whole idea behind this. And I think as the year goes through and we see the results this year and next, that's just going to be positive.
Another question is, we've obviously talked about the positive aspects. Are there any negative aspects out there in regards to Section 179 and the Section 168 that people should be aware of? Because we've obviously talked about the upside in saving your tax exposure and the ways you can protect yourself from the things you purchased. What are some of the downsides, if any?
Again,
generally speaking.
Generally, again, based on everybody's individual situation, which is going to be different. If we buy this piece of equipment this year and we depreciate 100% of it this year, old depreciation used to be, back in the day, you would buy that piece of equipment and you would depreciate it over 5 years. So $10,000 piece of equipment, this year, 2000 next year, and 2000 going forward. We're getting this whole deduction in 2018. What if we have a really good year again next year and we don't need, the downside would be if we don't need to buy another piece of equipment in 2019, we've taken the whole deduction in 18, and at the end of 19, we're going to be sitting here going, oh, I don't have a depreciation deduction this year for that piece of equipment. I took it last year. That would be the part of a downside.
If you don't purchase new
equipment in
2019,
correct.
If you're making assumptions off of your 18 equipment.
Correct.
Okay.
Correct. If you need to buy a new piece of equipment in 19, by all means, go out and do it. You will get the Section 179 or bonus depreciation on that piece of equipment in that year.
But the goal is, with the economy being strong, it's a good chance to do it now while things are up and you're going to have maximum exposure.
That's correct. And you would buy a piece of equipment this year with the intent that maybe if I'm not using it this year, I'm going to use it next year, and it's going to increase my sales and thereby my profits next year. So again, I hate to be short-sighted and let the tax tail wag the dog here in 2018, but if we're just looking at 18, yes, but if we're looking at 19, some consideration may want to be given to when do I want to do this? So that's why you have to examine your own personal tax situation with your own tax advisor and consider whether I'm buying it on December 31st or January 1st.
Stupid question, but one I think is interesting. There's obviously a max limit on the Section 179. Is there a minimum?
No, there's not.
So there's no minimum.
$1.
$1 we start. There's no certain threshold to hit.
No, there is not.
In order to maximize it. Okay. So it really sounds like it's a go-to strategy right now, based on the market conditions, based on where we are at this time of year, having that 11-month roundup of where you are with your tax consultant, understanding now in these last 30 days, give or take, where you could potentially position yourself to limit exposure, really. I mean, that's trying to be strategic. So really, it's a good way to conserve the profit, maintain the profit, but also shield your tax exposure as well with this. That's the main goal behind it.
Correct. And let me add one more thing. You can go out and purchase this piece of equipment. You don't have to actually pay for it in December. You can take possession of it in December, deduct it for depreciation, and if you need to pay the bill in January, you put it in your accounts payable and pay it that way.
So the payment can actually be deferred even upon receivable of the equipment?
The law says, do you have possession of it, and are you able to use it in the year that you deduct?
Gotcha. So just having ownership of that equipment and having it and using it, even if your payment is deferred beyond December 31st,
Correct.
it technically qualifies.
Again, speak to your tax advisor. I don't know everyone's situation. They all could be different, but yes.
I would like to open up, if there's any other questions out there, anything that I didn't cover or ask, I would open it up to anyone else who is on the call. Well, on behalf of Joel, I just wanted to say thank you for everyone who joined the call. And if there's any questions, feel free to reach out to Keystone Building Point as well as to Joel. And if there's any questions that you need to speak to your tax advisor and you wanted to get some clarity first, our sales team is happy to help you and connect you to Joel, that he can kind of jump in on that call. And we just wanted to thank you for your time and efforts, and reach out to your local sales rep if you have any questions or if there's anything that they're able to help you with. And on behalf of us here at Keystone and here at Building Point, we just wanted to say thank you very much.
Thank you all.
Okay.